Okay, super. So for those of you who've not met me before, my name is Paul and I'm from MAP. We are fundamentally a firm of accountants based in Manchester, but we actually provide a full outsourced finance function specifically for digital agencies. Most of what we do is built around Xero as a core accounting system, though we do work with other accounting systems as well. And we're on a mission journey, if you like, to help agencies to climb what we call the finance maturity curve. Now, when we talk about financial maturity, I define that as a process of getting clear about what you want and how you're going to make it happen. So this is not about sophisticated corporate difficult systems and processes. This is about being able to clearly define what it is that you're trying to achieve, how your business fits into that, and how we can help you to better plan and track the progress of your business against your own unique plan. I'm very passionate about this because I think because we're based, because we specialize in a niche of the digital creative sector, a lot of people can get, oh, sorry, somebody just needs muting there, just bear with me a sec. Okay, it's gone now, thank you. A lot of agencies are very keen to understand what others are doing and they're keen to benchmark against the average industry benchmarks. I'm much more passionate about taking the time to understand what you're trying to get for your unique business, because it's the only one that's designed to suit you. Every agency on different parts of the journey, everybody has different goals and everyone wants different things. So it's really important that we take the time to understand the goal and what it is that you really want from your business. We're going to jump into a poll in a second, but this is this idea that I know I'm preaching to the converted here because most of you will be business owners, but lots of people think success is a straight line and it's upwards and to the right. Those of us who have been in business for a while know that it's very different to that. It can be very volatile. You feel different every day. Some days you feel like you're winning, some days you feel like you're failing miserably. But it's, are we directionally correct? Are we moving in the destination towards the destination that we want to be? In my view, without goals, you endanger overreacting to both the highs and on the lows. On the good days, you think you're invincible. On the low days, you think it's all falling apart. Without having goals in place, that can become very energy zapping and very tiring if we're just up and down all the time and not knowing what it is that we're actually working towards. And it just becomes this never-ending vacuum of hard work and adrenaline without any real sense of purpose and accomplishment. So growing bigger is not success unless you had a compelling, well-crafted goal that required the business to get bigger. Success is about, as I say, understanding what your plan is and helping you to work towards that plan. So I sort of see it as three different types of goals in the following order: income, time, and emotional. So income could be the amount of drawings you're getting from your business, however you want to define that, however you get that money out of the business. But you might also want to look at the total package, because as a business owner, you're in quite a unique position to be able to structure the way that you get value out of your business. So that could be via salary, it could be dividends, it could be benefits from the company, it might be pension contributions. You might make the decision to draw less from the business 1 year because you get value in other ways from that business. So you might have an overall income goal that is either your drawings or your total remuneration package from the business. It might also be about, it might also include a capital event. So being able to sell some shares in your business or exit the business completely. So what is your income goal is one to think about. The second one is time. So do you want to get down to working 4 days a week or 3 days a week? Do you want to have a month off a year or 3 months off a year? Is your business there? Is part of the reason that your business is there is to help you to work less and spend more time with your family? So you might have a goal in terms of having more time available and less time working. And then thirdly, you might have emotional or enjoyment goals. So this could be something that you want to buy. It could be an experience that you want to achieve, traveling, again, spending time with your family, doing things that give you memories and give you purpose. So I'm going to put up a poll to get you thinking about these. I appreciate it's difficult and I've put you on the spot. You've not had much time to think about it. But that's part of it, really, to see how quickly these things come to you, or how much work you still need to do to flesh out these goals. I had a goal. I've always had a goal since about 2009, when my mum and dad unfortunately lost their house. They couldn't afford to pay the mortgage anymore. My dad had put a lot of hard work, sweat, blood and tears into building his cherished snooker room, and I was brought up playing snooker with my dad in the room that he worked very hard to build over a number of months. They didn't have a lot of money. It was literally go out and do his work, come back with a bit of cash, pay my mum what she needed to pay the household bills, and then the rest was on the next lot of bricks to build this snooker room. And somehow my dad, as a plasterer, managed to assemble a form of a snooker room, and had many amazing occasions in there. And then it was a very sad moment for me when my mum and dad had to sell the house with only 3 years left on the mortgage. And for me, it was seeing my dad lose a big element of his pride in losing that snooker room. So I've always had a goal to rebuild a snooker room effectively and put a full-size snooker table in it and invite my dad round for a game of snooker. And that's been my drive for many years, to accomplish that. Not something that you can really put value on. It's not about income or time. It's about actually an emotional experience. So I'm going to hand over to you. This is all anonymous, by the way, so I don't know who said what, and nobody else will know. But just spend a couple of minutes thinking about one income goal that you might have. Remember, this is rough and ready. This is not meant to be scientific. This is just you having a quick moment to have a think. What would constitute a goal from an income perspective? You're not sharing this with me or anybody else. You're just writing it down for your own purposes. So what would you like to get your income to be? What would a time goal look like for you in terms of time that you spend working versus time that you spend not working? And what would be an emotional enjoyment or purpose goal? So I'll just give you a moment to think about that and write it down on your laptops or pen and paper. You're not going to share this. This is private to you. And then when you get a moment, there should be a poll that pops up on your screen. And this just asks the question as to which of those goals did you find easiest to come up with? I'm genuinely interested in this because I have no idea where this is going to go. I don't know which goals people generally find easier to answer. I've got a bit of a hazard guess, but I could be proven spectacularly wrong. So that's great. Thank you. That's everybody's answer. Thank you very much. So I think you'll be able to see the results at the same time as me. Yeah, because I'm clicking end results. And Paul, I'm going to share results. So interestingly, I was spectacularly wrong, because I thought many people might struggle to think of a purpose goal, because a lot of people in business, find themselves going through the motions. They lose sense of why they set up in the first place and what it is that they're trying to achieve. But actually 4 of you found the purpose goal the easiest, which is great. And then 3 each on income and on time. So hopefully that gives you something to reflect upon, and maybe you could go away after today and think about what answers you might put into the other 2 categories, because for me, this really helps you to get crystal clear about why you're doing this and what it is that you're trying to achieve and what success looks like for you. Because trust me, it's not doing what another agency does or achieving what someone else has achieved in the press. You're going to be hugely disappointed if that's what you're striving for, and then you come to achieve it and realize that actually it didn't mean anything for you in terms of more income, more time, or more enjoyment and fulfilling your purpose. So to extend that a step further, we've built something called a goal setting tool at MAP, and this is free for you to use. So I'll be emailing all these documents out later. But if I click this link, it should take me here into another tab. So put your details in here, make a copy of this Google Sheet, by the way. So file and make a copy. It's read only, because obviously this is our public version, or download it into Excel if you prefer. And this is basically taking you through a number of questions that will help to ascertain what size of business and look of business you actually need to help you to achieve. In this instance, this is about driving your income goals. And often what we find is that the size and shape of business that you actually need is very different from the one that you thought you did. So the first question is asking, what should you be paid in your role as a director? So in your business, most people here today will play two roles. You're a director of that business and you're a shareholder of that business. As a director who's operating and leading that business, you deserve to be paid a salary. What is a going rate salary? So I've just suggested here that that might be something like £80,000. We've got a link here to go into a research report to provide some benchmarks if that's useful. What do you think it would cost effectively if you weren't running this business? If you weren't involved, you were a silent investor, what would you need to pay somebody to do the role that you're currently doing? That's the first thing that you should be paid. Secondly, you should be paid as an investor shareholder of this business. So what do you want to get out of this business in the way of profit extraction? Because you're putting a lot of financial and emotional and time investment into this business. What is your goal for what you'd like to be taken as a shareholder? Then if you've got any other shareholders involved, what needs to be paid to them? So in this example, it suggests that you've got 90% in the business and 10,000 therefore would need to go to the other investors if you're taking 90. If you're the 100% shareholder, then you wouldn't need to put anything in there. We also need to keep profit in the business in the form of working capital. So how much do you want to retain? And then basically these figures here are talking about are totaling the total value that you're creating in the business every year. So for you as a director, you as a shareholder, any other investors, and the retained profit, which obviously by definition belongs to you and the shareholders. Then what are the business overheads? So how much does it take to run the business, excluding your salary? What additional costs do you think are required? So you might be under investor in certain areas at the moment. You know that you need to invest more. How much is the extra investment in overhead? What is your expected gross margin? So this is how much of your revenue is left after any directly associated costs. So if you sell website hosting, for example, a percentage of your revenue is going to be probably elastic, related to paying other hosting providers, paying for servers. So if 10p in every pound is spent of your revenue, then you've got 90% gross margin. And then if you wanted to extend this further, you could do, but you don't have to. 8, 9, and 10 is them talking about your target customer, target rate per hour, and what percentage of your team do you think, what percentage of their total time do you think will be billable? What this is going to do is to provide you a mini P&L. So what we've basically done here is we've worked backwards and said, okay, 130,000 is the profit required from above. Okay, so that's the 130,000. We know that profit needs to be taxed to corporation tax. That will give you a profit before tax. In order to get there, we've had to pay for these overheads and commercial salary for yourself. We said it was a 90% gross profit margin, which is 10% direct cost sales. This business needs exactly £584,993 in order to give you everything that you need. And what you could then do is plot your current numbers in, so where you are currently, and that'll tell you the gap to get from where you are now to where you want to be. As I say, for a lot of business owners, they're surprised that they thought they needed a much bigger business than they do to actually give them everything that they need. And then the extended bit down here, a bit more management information, will tell you what that equates to in terms of number of customers, number of billable hours, the size of team that you therefore need, and what gross profit per billable full-time equivalent. As I said before, we get lots of people asking, what's a good profit per billable person or revenue per head? It really doesn't matter what other businesses are achieving. This is all that matters to you and your business, because you'll have taken the time to actually work out what's needed to give you the business that you want. So that's the goal setting tool. As I say, I'll share that with you after the session today, and I hope that's of some use. The next step then would be thinking about, okay, that's all well and good, but if there is a big gap, some people don't need to grow the business at all. They just need to make a few tweaks to get to where they want to be. But if there is a bigger gap, then that's not going to happen overnight, and maybe it's not going to happen in 1 year. So one of the things that we help our customers do is to map out their entire strategy from a financial perspective, from a customer's perspective, from a team, from an overall business plan perspective. One of those elements is this financial mapping, which looks at a profit and loss year on year effectively. So I've already plugged the numbers in here for completeness, but you're basically going to fill in these columns here and this number here. So where do we want to be? We want £1 million business delivering 200,000. This is not in line with the goal setting example I just gave. This is a different business. Want to retain £300,000 a year. Want to draw 100,000 a year, and we want to achieve a valuation for the business at 6 times EBITDA. If you then plug in where you are now in current year and how many years you think it might take you, how many years you're willing to wait to get from where we are now to where we want to be, this will then tell you your effective growth rates per year, and then your year-on-year performance P&L is now built out. Now, obviously, this is very high level, but it helps to just start to paint the picture of the business that we're trying to build based on where we are now, where we want to be, and how long realistically we think it's going to take to get there. A budget then. So what I've just shown, as I said, is high level, it is targets. What we would then look to do is say, okay, there are targets for the next 4 years. For the next 12 months, we can do better than that, because for the next 12 months, we should have some visibility of where we're going as a business and how we're going to get there. So this is where we will break down a 12-month profit and loss. As I said, most of our clients use Xero as an accounting software, which we love. It's fantastic. But the reason that we build these Google Sheet workbooks is it allows us to go a level deeper with the budgeting. So once we produce this budget, we would then upload it, this tab of information here, your profit and loss, into your accounting system so you can compare the actuals against the budget. But the reason that we do it in the Google Sheets is so that you can then go into the specific tabs. So everything in here for employment, for example, is fed through from here. And this is where you would literally have every person that you employ, their names, maybe their roles, their salary, whether they're paying into a pension, whether we think we're going to need to invest in things like recruitment agencies. And so we can start to build models and do lots of things from here. And then that means that when, you know, your accountant, your financial controller, your finance manager, whoever it may be, is producing your management accounts at the end of June, they could say, okay, this is how we performed. This is how we said we're going to perform in the budget. And here's the differences. You know, we said we were going to employ this new person in the budget, and actually we didn't. So there's been a saving. Or we said we were going to employ them here, but we actually employed them earlier. So there's been a variance. So this gives you all the detail that you need. And as I said, this is freely available to you after this session, to be able to think about the next 12 months, month on month, what the business looks like. And you'll be amazed at how many things come out of this exercise, because you genuinely are looking at all of the incomes, all the expenses, and all of the activities and drivers of that income and expenses over a 12-month period to give you a proper financial budget. Then off the back of the budget, you can start to build financial and non-financial KPIs. Again, lots of people ask me, what KPIs should I be tracking? It depends. It depends on, as I've said, the goals of your business, the financial targets you've put in place, your budget for the next 12 months. Then you'll start to ask, okay, what's going to derail or help that budget to succeed? And they are the answers to the KPIs that you need to be tracking. So these are just some examples for completeness, but you would need to work out what the appropriate KPIs are for your business based on the budget exercise that you put in place. You know, what are the things that are going to drive that success? Because finance in nature is lagging. It's after the event. These are the activities that actually drive the outputs of the financial information. Then once the rubber hits the road, you're actually getting into that 12-month budget. Once month one's gone, you don't want to be starting off behind. You want to build momentum. You want to be celebrating hope for the success at the end of month one, and then get that momentum ready to achieve what you said you're going to do in month 2, 3, 4, and onwards. So these are an example set of management accounts that MAP would produce for a typical client. We would always start by talking about what it is that the agency or business is trying to achieve, what's their overall goal, because we'll have been through the exercises that I've just explained and how that breaks down year on year, doing the financial mapping. Then we would provide a snapshot of the financial performance. The top row is talking about the performance for the period, the month, for example. The second row is for the year to date, and then the bottom one is the balance sheet KPIs all around cash flow. So what's the revenue for the month, profit for the month, and profit margin? And then as we go through the report, you start to see that in more detail. So here's the profit and loss comparing to the budget that we've put in place. Here's the actuals, there's the budget, and there's the difference on a line by line basis. We use this principle of what I call the collapsed P&L. So you might have 100 or 1,000 account codes behind here. For example, behind staffing, you would have salaries, employers' national insurance, employers' pension, staff entertaining, staff welfare, staff training, recruitment costs. Here, we're just going to group it into staff costs, but we know that we can expand that to see the detail. But at management level, what we're looking to do is cast our eyes down. Where here are there glaring differences? So for example, why have we ended up spending £16,000 more on office costs? I do want to see the breakdown of that. Whereas the £433 saving on advertising costs, I'm probably not as interested in understanding the detail there potentially. And then we've got the same report year to date, because you might have ups and downs. You might be behind one month, ahead in another month, and we're okay with that. And then here you've got the actuals plus the budget. So in this example, purple column is month 11. So everything up to here is actually happened. Month 12 is our budget for the next month. And then that tells us what we're tracking for the year end figure. And we can compare that against what we said success looked like for this year. And then a balance sheet we use to help to understand the assets and liabilities and the retained profits that sit in the business, and any other charts and KPIs that we think are useful to our clients. So that's your management accounts. It requires very good and on-time bookkeeping to be accurate and to be timely, and it requires somebody who's qualified and skilled enough to make sure that month-end adjustments are posted into your accounting system, and that you've got somebody with the experience to actually narrate that performance and help you to understand what's happening in your business, where you're on track and where you're off track, and what we can do about it. Once you've done that, you can then start to build a live forecast. So with all the best laid plans of your budget, obviously, as soon as you get into the start of the financial year, something's going to be different, something's going to change. You didn't get the customers you wanted, or you didn't get the staff that you wanted, or you got more customers paying a higher price than you wanted. You've got more capacity than you thought you had. You know, things are going to change, whether that's overheads, staffing, revenue. So what we look to do is to take the budget that we've built and start to extend that into a live forecast. So we went through the budget before. You would then duplicate that and keep it live based on any changes. So you've got the fixed original budget that you created, but then you've got this live forecast of anything that's changing. And a big part of that would be your revenue forecast, which can be a separate document in itself that feeds into the finance forecast. So this is when you can start looking at how does the revenue break down. You could break down per client, you could break down per service, you could break down per team potentially, and you start to get everybody accountable for hitting the targets that we said we want to achieve for every month, and everybody understanding what those targets are and working towards that common goal. So you might have your CRM that tracks your prospective opportunities and comments and notes and upcoming meetings and presentations to deal with that prospect. Your revenue forecast is the financial position. So what are we actually projecting is going to come in, and what have we converted against the goals that we set for the business, and therefore where are the shortfalls, or where are we over against the plan. So that's a live finance and revenue forecast. It's a snapshot for the whole team to understand where are we today. We've got a budget which was fixed at the start of the year. What does that look like today? What's our forecast telling us we're expecting to achieve? And as I said at the start, we've taken the time as a business to document this and try to make sense of what a good finance function looks like. It's our firm belief that the majority of small to medium-sized business owners do not need an expensive in-house full-time finance director. You can access a lot of these skills on an outsourced basis, and you can access just the right level of skills at the right cost for the things that you need based on where you're on the journey. Some of this on this graphic might be overkill based on where you are. That's why we built the agency toolkit, which I'm going to share with you, so you can access a lot of this information for free to use yourself. But should you want the support, obviously MAP is here to help in all of these areas as well. So it starts with the essentials. This is the things that you need just to be able to do the basics. So, have we got the right data in place to help us to be able to understand our income and our costs and our cash flow, who we need to pay, who needs to pay us, all in one place. So we're not scurrying around with bits of paper or emails. We've got one accounting system and one source of truth. Are we keeping compliant? So are we doing everything we need to do from a payroll, corporation tax, personal tax, and company's house perspective? Do we feel assured that things are getting done right and they're getting done on time? Are we building a management accounts pack that helps us to understand performance? Have we built a budget to understand what the plan is for the upcoming financial year? And then are we able to actually compare the management accounts actuals against that budget? Because lots of businesses are guilty of building plans and then not actually tracking effectively like for like against that plan. Can we then build from that information live forecasts, because we've taken the time to segment the business and understand it in detail? Can we then use a live forecast to understand where we are today? And then for some businesses, this extended bit is where you're starting to work with somebody more of the commercial strategic FD caliber of person. So have we got somebody with financial acumen in our board meetings? Have we taken time to work out the longer strategy beyond the next 12 months, what we're trying to achieve long term, be that exit, be that scale, be that profitability? And have we got access to specialist services when we need them? So if we're setting up EMI share option schemes, or we're looking to set up overseas, or we're looking to buy out a shareholder, are there, do we have access to the specialists that we need to do that? So I would like to invite you to try out this scorecard. I'm just going to pop this in. I say I'm going to pop it into the chat, but you might not be able to see it. Hopefully I can pop into the chat. Even if you can't, hopefully you can still see it and click it. But just in case, I will try putting that into the Q&A as well, because somebody said before that they couldn't get into the chat. So I don't know if I can put a question in myself actually as the host. Amanda or Stuart, if you're there as my colleagues, if you could also.
We can see it, Paul.
Confirm you can see it, that's great.
Yeah.
Super. So if I'd like to invite you all to try this test. It's a series of simple yes, no, or maybe questions. So I'll give you a moment to work through that. Please don't give it too much thought, because we can go through the detail later. You'll see me just going through now, but hopefully I'm not distracting you too much. So if you're already on with it, just ignore me. When you get to the end, just in case you miss it, you've got a score at the top there. And the reason I say that is because it's actually asking you to provide your details in order to receive a full report. It's also giving you a further option to opt into our marketing. So if you don't want to do that, just don't tick that and click continue. You won't get any more emails from us, but you will get the detailed report. If you don't want to do any of those things, you don't want to give your personal details, you'll still get the score at the top there, which will allow me to post my next poll. Which is, what was your financial maturity score? So I appreciate it might take you a little bit longer to answer this next question if you're still working your way through the scorecard. If anybody is having trouble accessing the scorecard, please just pop that in the chat or the Q&A. I can make sure that that's sorted, but somebody's filled in straight away, so that's good news. It must be working. So did you get in the first third, the middle third, or the higher third, if you like. So 0 to 33% was your score, or somewhere between 34 and 66%, or 67% or above. What's your finance maturity score according to the scorecard? You don't have to do this now either. So if you prefer to do it later with more thought, I'll be sending you the link, but you can also do both. You can have a quick go now, and then you can take a bit longer to do it later when you receive it over email. So 3 people have scored in the first third so far, so 0 to 33%. We've had 1 person in the middle. Nobody yet to receive more than 67%, which is understandable. Okay, I'm just going to give it 10 more seconds. If you quickly choose one of those 3 options, if you've got time, that'd be great. 3, 2, 1. Okay, I'm going to end the poll. Oh, someone snuck in just in time. I'll give it another few seconds just because that's put me off now. So 2 people have now got in the mid-range and 4 in the lower range. Okay, I'm going to end it there. Okay, so hopefully you can all see that on the screen. So what we're saying there is not that 33% of people are in the essentials. It doesn't mean a third like that. You know, you could actually be well equipped in these areas, potentially extended, but you're suffering in some of the low areas. So you've got the ability to access specialists when you need them, or you've got a strategic FD in the board meeting, but you're not actually able to get your numbers out on time, confident that you're properly planning the business in the best possible way, maintaining data as efficiently as you could do, potentially. So no one ever completes any of these pillars. It's an ongoing journey, just like marketing services or technology services. It's never complete. There's always more that you can be doing to either streamline or improve in any of these areas. So the agency toolkit I spoke about before, I'm going to be sending this over to you as one full library of all of the things that I've talked about today and more. So you will have access to each of these tools. Some of them are locked and restricted for MAP clients, but you'll still be able to get a feel for what's available. But the majority of these things are available for you to take and use and ask any questions that you've got. So you'll see things in there like the goal setting tool, finance maturity curve explained plus the scorecard. Got the management accounts example, the forecast spreadsheets, and then a number of other things that we've not talked through today. One of the key ones actually a lot of our clients like is the capacity planner. My view is that you can't actually produce a meaningful budget without one of these if you're running a service business, because there's no way you can set your revenue targets month on month without knowing who works in your company, what they do, and what their potential output is based on your rate card and how much they're utilized in the business. Even if you don't price that way on an hourly or day rate, your team are only capable of doing so much based on the capacity of that team. So this will help you to work out the total revenue that might be available from that team. So as I say, a lot of clients really value this capacity planner in feeding their annual budgeting process. So I spent a lot of time on Google Sheets today. That is not representative of necessarily entirely how we work with our customers. We are known for being very technology leading. So we have different technology platforms. We've built effectively an agency app stack of the technology applications that we think fuel an agency's business. So from a reporting perspective, obviously Xero is at the heart of that, but that feeds into other things that help to provide detailed management reporting based on how people are spending the time, based on cash flow, based on producing charts and reports and KPIs that bring your information to life. We can make payments on behalf of our customers. You don't need to spend lots of time paying your suppliers, paying your staff. We can do that using the information zero, feeding into a third-party application called Telaroo. We can speed up the collection of expenses, purchase invoices into zero by using an application called Dext. We help with tax planning using Diagnostics. We've got BrightPay for payroll and Chaser for automated credit control. So I appreciate, there's no way I can explain all of that today. This is from 10 years worth of testing things and applying them to agencies. This is the technology that we tend to push into an agency where appropriate. However, we're not technology salespeople. We're not incentivized to sell any of these applications. It's just that we found has been best practice. But if there's something we think is more appropriate for your business, then we would work on that instead. So all the Google Sheet workbooks are our own IP, if you like, that we've built to help to build the information needed to run a finance function effectively. But we couldn't do it without the use of streamlined technology as well. And there's just a flavor of some of the things that we use. I'm almost finished now. So if anybody has any questions, please, now would be a good time to pop them into the Q&A. I can unmute you if you prefer, if it's a long question or you just prefer to ask verbally, then just explain that in the Q&A or the chat and I'll unmute you. Thankfully and very proudly, I was able to fulfill one of my goals earlier this year, which was to build the snooker room that I wanted to build. So that's my dad in the background and my brother coming over to see the snooker room for the first time. So my dad is still plastering, and he actually plastered that room without knowing it was going to be a snooker room. He thought it was going to be an office. So when I invited him to see the complete office and he walked in and there was a full-size snooker table there, he was quite surprised. That wasn't about me getting more time or more income. That was about just pulling all the pieces together to make that happen. And I was able to achieve that ambition, and had great fun with my dad and my brother that night, and now get to spend more time with my dad doing the thing that we love at home. So that meant an awful lot to me. I'd love to hear about the things that drive you and your purpose goals as well. Would be great. There's my information. I'll be sending the slides over along with the agency toolkit after this session, which should give you everything you need to go back through everything that we've discussed today. And the recording will also be made available. This has got links to, so obviously that's my email address. This has got links to Map's Twitter and my own Twitter, and Map and my own LinkedIn there as well. So you've got all of those contact details. So please feel free to get in touch. If there's any questions based on the things that we've been through today, or questions about how Map works, or just looking to get a better understanding about your agency and how we work with other agencies, then please feel free to do that. So I'm going to stop sharing now. I don't think there have been any questions. Stuart, can you see any? I wonder. Can't see anything in the chat. Q&A, unless I've missed anything. No, so I'll just get a few more seconds if anybody had any questions, but if not, feel free to send those over email. We ended up with a lot more people during this session than I thought we did at the start, so there must have been quite a few strugglers. So thanks guys for coming along today, giving us your time after a long bank holiday weekend. And if there's anything else myself or any of the Map team can do to support you, then please let me know. Okay, thank you.